Hello and welcome to Smaulgld.com. Today we're going to look at the current crypto craze and ask the question on everyone's mind, are they in a bubble? Well, the bubble I believe is in the ICOs, not in the cryptocurrencies. I'm going to explain why this is not investment advice. This is an analysis of how I see things, and they all make many assumptions that nothing changes, which of course is a ridiculous assumption, meaning there's no government interference, there's no event that's unforeseen or something that is foreseen, something to do with the internet going down. But this analysis is going to deal with the current state of play and if things continue as they are, i.e. people continue to pour money into initial coin offerings and people continue to invest in and adopt the use of cryptocurrencies. So we're going to make a distinction between cryptocurrencies and ICOs. I believe that cryptocurrencies, especially Bitcoin and Litecoin, are less prone to bubble valuations than ICOs. And we're going to use the gold rush analogy to help understand this. And then we're going to look at a chart of some of the significant differences between ICOs and Bitcoin and Litecoin. Now, in a gold rush, pick and shovel sellers often make more than the gold prospectors. Those people who sell the tools of the trade to the people looking to make a quick buck. Those people, they may not have struck gold, but they cash in on the gold rush. Now, in a crypto gold rush, Ethereum and Bitcoin are both pick and shovel sellers as well as the gold themselves. And this is very significant. We're going to see why in a second. So let's look at a gold rush analogy. So in a gold rush, as we say, people are looking to go get gold because gold has value. They spend enormous time and effort into trying to cash in on the gold rush, whether it be as a prospector or someone selling goods and services to the prospectors. So in a crypto gold rush, it's no different. The goal in a crypto gold rush is to get Bitcoin, Ethereum, Litecoin, Dash, or some other cryptocurrency, or to convert it into fiat. But the main goal is to make money from the cryptocurrencies themselves. Now, the gold prospectors, you could say those are the miners, but that's not what we're talking about here. They mine for these. They make a lot of money mining the cryptocurrencies. But the prospectors I want to look at are the initial coin offering companies. They're the ones who really stand to make significant gains, even more than just the gains that you can make off of the cryptocurrencies, at least now. And then you have your pick and shovel infrastructure type. You have crypto exchanges like Coinbase, Kraken, Bitstamp. You got hardware wallet sellers like Ledger, Trezor, KeepKey. You've got Bitcoin innovators like Bitcoin sticks. Check out this Open Dime company. They sell these sticks. You could put Bitcoin on them and trade them physically without actually having to do an online transaction. And then Ethereum and Bitcoin, as I mentioned, themselves are the picks and shovels, so to speak, because especially Ethereum is used to fund the ICOs, and then Ethereum itself is used to actually run the DAO or the ICO company. So you need Bitcoin and Ethereum to buy into ICOs, mostly Ethereum, and then you need Ethereum to actually run the company. So Ethereum is actually both the gold and the pick and shovel. It's actually the infrastructure and it's the end goal that people want. It gives Ethereum an advantage, but as we'll see, Ethereum has a disadvantage in that it's not limited in supply like Bitcoin and Litecoin because it's not technically a cryptocurrency. Now, in a real gold rush, the analogy would be you have gold brokers, which are your Coinbase, your crypto exchange analogies, transporters of gold, storage of gold, that would be like your Ledger and Trezor. You store in your hardware wallet, well, you store your gold with a vaulting service company. There's insurers, you have protection around those in a gold rush community where you have people protecting the vaults. Similar, you have your hardware wallets, you got your pick and shovel sellers in a real gold rush, and you got other ancillary services that all support the gold rush ecosystems. You got restaurants and so on. So you have a similar analogy in that you have the gold and crypto infrastructures, and there's a lot of money to be made on both prospecting and on the end good itself, the Bitcoin, the Litecoin, or the gold. Now they say Litecoin is silver to Bitcoin's gold. That's just the analogy. Now let's take a look. This is the most important part of the talk. Comparing the bubble-like nature of ICOs versus cryptocurrencies. Here's why ICOs are far more prone to bubble valuations. First of all, is an ICO valued based on profit? Well, eventually it is going to be. It's a company. It's got a business plan. It's supposed to execute on it. And eventually, if it doesn't, it'll be valued as not being successful. Cryptocurrencies like Bitcoin and Litecoin are not based on profit. They don't have to show a profit. That's a huge advantage. There's no test of them other than adoption, use, and interest. So if people want to use Bitcoin and Litecoin, they want to buy it and hold it for whatever reason, whether it's a store of value or a trade, the interest in the cryptocurrency and the hoarding of Bitcoin and Litecoin in cryptocurrencies are what give it value, not whether it makes any money. It's a huge distinction. And right now, there's a question mark. Will ICOs make money? We don't know. We've seen over the last 8 years that the adoption rates of Bitcoin and Litecoin for both use and hoarding are increasing. Now, if that stops, well, then all bets are off. But if that continues, that is a disincentive to call it a bubble, because the more it grows, the more value it has. The next one is limited issuance. ICOs? Maybe. Some of these ICOs are open-ended. They have their first target that they want to reach, then they have their second target. Maybe they'll put a cap on it. But basically, you don't know how many tokens are going to be in the ICO. Flip over to Bitcoin and Litecoin. You know, 21 million for Bitcoin, 84 million for Litecoin. You have certainty there. Liquid trading market. Some of these ICOs, maybe, maybe not. A lot of the exchanges won't bother with a lot of the ICOs to trade them because they're not sure whether they're going to reach critical mass, whether there'll be enough interest, and so on. Well, cryptocurrencies, Bitcoin and Litecoin, I don't think you can find an exchange that deals in cryptocurrencies that doesn't feature those two cryptocurrencies. Indeed, Coinbase, with its nearly 10 million users, only features Bitcoin, Litecoin, and Ethereum. Ownership interest in an ICO. Will you get ownership interest in the underlying DAO? Maybe, maybe not. Some of the tokens don't give you an ownership interest in the company. Why? They don't want it to be deemed a security, because if it's deemed a security, then they have to file with the SEC, and they don't want to do that. But then what are you buying? So you're not sure if you're getting an ownership interest in an ICO even when you buy a token. Do you get an ownership interest when you buy Bitcoin or Litecoin? Yes. You buy one Bitcoin, you have 1/21 millionth of all of the Bitcoins. It's very easy to figure out. Now, that value is not based on the profits that Bitcoin's going to make or Litecoin's going to make, but it's valued on how many there are and how many of them you have. So if you have 21 Bitcoins, you have 1/1 millionth of all the Bitcoins. Does the number of users matter? ICO? Maybe, maybe not. You can get a lot of interest in an ICO. You can get a lot of people to use the ICO, to invest in the ICO, or you can get a lot of people to use the product that the underlying company is issuing. But that doesn't matter unless the ICO actually makes money, because now you're talking .com valuations, how many users you have, and so on. Flip over to cryptocurrencies. Do the number of users matter? Absolutely. The more people that use Bitcoin, Litecoin, the larger the ecosystem grows. The more people that invest in Bitcoin, Litecoin, the larger the system grows. Now remember, the system meaning there's still only 21 million Bitcoin, 84 million Litecoin, but there's more people involved in that. There's more people interested in buying into and using that. That can only raise the value of those two cryptocurrencies, in my opinion. Now, if you do internal development work, will that increase the value in an ICO? Maybe. It's just like any business investment. If a business invests in R&D, does that help the company? Could, should, that's why they do it. Might not. You could invest to build a new factory in a company, and the customers don't come, they don't like your product. So that internal work that you've done, that internal investment, may or may not inure to your benefit. Same with an ICO. Company can raise a lot of Ethereum, they can put that Ethereum to work, and then the product doesn't get adopted, or it gets adopted but it doesn't make the money. Now, does internal development on cryptocurrencies like Bitcoin and Litecoin increase the value of those two currencies? Almost positively, absolutely. When the internal developers work on things, first of all, you don't pay for that. You don't pay anything for that. There are people working on developing improvements to Bitcoin and Litecoin all the time. If they get adopted, it's free work for you. That internal development work should increase the value. Not a definite yes, they could screw up, but in most instances, because there's so many people working on the development, they come up with the right solution. Now, does external development increase the value? What do I mean by external development? Well, there's an entire ecosystem, as I mentioned, around Bitcoin and Litecoin. For example, if you just scroll up here, you can see these hardware wallets. Well, the fact that these hardware wallets were created, and it doesn't cost your Bitcoin, and actually the monies that were put forward to create these digital hardware wallets like Trezor, Ledger, and KeepKey were done independently. And they just add to the value of your Bitcoin and Litecoin because they make it possible now to store them off the exchanges. The exchanges themselves also give value to Bitcoin because they provide a pricing mechanism and they provide a place to buy and sell the coins. So external development for the Bitcoin and Litecoin is just a boon to those cryptocurrencies that you don't have to pay for. Well, external development may or may not help an ICO. I mean, tangentially, yes. If you have one of these wallets or you have Ethereum on Coinbase, you can use that. You can piggyback off of that external work to buy into the ICO. But generally, there's not external work being done to benefit a particular ICO's DAO. So all the external work and all the internal work that happens with respect to Bitcoin and Litecoin is basically free to an owner of Bitcoin and Litecoin, and it inures to your benefit. It creates more users, it creates a better product, and it drives the price higher. And it doesn't cost you anything to get that work. Whereas the ICO, most external work isn't done for an ICO. Why would people put money into helping an ICO unless they were going to benefit from it? So that turns you to internal work. Well, that internal work, as we mentioned, may or may not be successful and may or may not pay, not dividends, but rewards in the form of any type of additional use or profits. So just to conclude, the ICOs are definitely, if you want to call them a bubble, you can, because they are basically based on nothing other than pie in the sky. We've got a business plan, we've got a white paper, and we're hoping that this works out, so please invest. Now, you could say, if you take the view that Bitcoin and Litecoin themselves, cryptocurrencies, are pie in the sky and they are nothing too. However, that's been disproven by the market because of almost a decade of increased acceptance of a certain segment of the population, a certain segment of the investing world, that they do indeed have real world value. So the cryptocurrencies, I believe, are far less prone to being viewed as a bubble if indeed the same dynamic exists. Increased use, increased size of the ecosystem, external products, external development, internal development, and then increased use and investment in them creates why you have that linear line going straight up for the value of Bitcoin and Litecoin. Now the ICOs can go straight up too, but then you got to go back and ask the question, these questions here, are they limited in issuance? Is there a liquid trading market? Will they be valued on profit? Does ownership interest? Do you get an ownership interest? Do the number of users matter? Is there internal development work being done that will increase value and external development work that will increase value? And if you look here, look at all these maybes. ICOs are definitely more speculative than cryptocurrencies, Bitcoin and Litecoin, which in themselves are speculative. Thanks for listening. Let me know what you think, and we'll talk to you soon.